All right, so the first stock we're going to take a look at is James Hardie. It's on sale. And also TechnologyOne. James Hardie is forecasting lower earnings in fiscal 25. Persistently high interest rates and sticky inflation have weighed on the housing market, particularly in North America, which makes up 74% of the company's global net sales. Meanwhile, for the current fiscal year, the company reporting net sales at a record just over 3.9 billion US, up 4% from a year earlier. It expects adjusted net income for fiscal 25 between 630 and 700 million. FY25 North American earnings margin expected to be in the range of between 29 and 31%. Checking in on its stock today, it is being punished, down 10%. All right, Philip, over to you. What do you make of that result? And I guess obviously with the focus on what we're seeing in North America at the moment.
Look, obviously disappointing, missed analyst expectations and downgraded. They're not seeing the volume growth come through in their housing clients, and the reason for that is in part housing's expensive, cost of building is expensive, and interest rates haven't come down as some people first thought. I remain of the view that just because interest rates have gone up, they don't need to come down. They went up because they went down, so we're probably back to some level of normality. And the data we're seeing globally, certainly US, Australia, in terms of inflation, unemployment, there's no reason to suggest interest rates need to come down in a hurry, in my opinion. I'm not an economist, but I can see the data. So they're probably going to take some time to come back to growth. I've learned the hard way, just because the stock looks cheap, you don't need to rush in off the back of a downgrade. So for me, they might have 12 months of pain ahead of them before they can get to some level of growth. So I'm going to call it a sell. If the view is to buy because of an interest rate cut coming in the next sort of 12 months, I don't think we're going to get much, to be frank. So I would avoid the stock for the time being. It'll probably get cheaper in the next few days. You'll see analyst downgrades overnight. I would stay away from this one for at least the next 6 months and then reassess. So it's a sell from me.
Oh, I wish you had told us yesterday. Rudi, do you have a particular view on James Hardie?
Heavy hindsight, huh?
Yeah.
Well, let's start with the positives. This is without any doubt one of the highest quality cyclicals we have on the ASX. However, I'm also a firm believer that that if you follow stocks for a while, they'll teach you a lot of them. And it's not the first time that James Hardie has had to issue a profit warning. Contrary to most people who look at the share market in terms of cheap and expensive, I think we're going through this period in the share market where we will see a lot of profit warnings, and we've already seen quite a number, including at 3:30 on Friday, Data trying to get something out and nobody notices. So I look at the share market in terms of the strong and the vulnerable, and you will see that the vulnerable are issuing profit warnings essentially. And cyclicals like James Hardie, unfortunately, one of the problems is costs. And on the early responses I saw this morning, there's quite some analysts a little bit upset, I would say, by the fact that they basically are not reducing their costs, or maybe they're unable to, maybe they don't want to. But that's one of the reasons why they have to issue a profit warning. Slight difference in view of with my friend Philip. I think central bankers are waiting to cut because they know that parts of the economies are in recession, basically. I mean, I see restaurants closing doors in my environment. It's just that because we also have AI, we also have GLP-1s, and we also have wealthy people that actually gain from the current circumstances. We have such a bifurcated, polarized economy that's also reflected in economic data and in the share market. So it's not a straightforward story here, but I do think we will see interest rate cuts coming through. I do think that's the reason why share markets are where they are, and for most people that's maybe a little bit too elevated on valuations. But I agree with Philip. I think having just released another profit warning, I think the share price will remain under pressure for quite a while. And for the institutional investors, the problem is they're trying to position now for those interest rate cuts to come through, which basically means we should see better profit growth in 25 and 26. The problem is, as we now see with Data, with James Hardie, with Elders and others, is that there's a real possibility that first we get bad news, which might put pressure on share prices, and then do you get positioned early or not? Because you will have to suffer the pain. Michael Hill is another one that issued a severe profit warning. So I think there's a lot to learn here, a lot to observe from it. This is not a one-off. I think this will color the share market between now and August. So for the time being, I agree. If you own it, I'm assuming you own for a through the cycle recovery story, so you wouldn't sell. But I do think you will have to stomach more pain, and you will have to be patient for this share price to be picked up again.
All right, so prepare for that negativity. So a sell and a hold then for James Hardie. Well, let's move on to our second stock of the day. That is TechnologyOne, which has certainly been a bit of a market darling. Certainly loved by investors who follow us. Now, higher profits for first half of FY24 and record interim dividend. Profits jumping 16% to $48 million. Dividends at 5.08 cents a share, up 10%. Total revenue at more than 244 million, up 16%. And total annual recurring revenue more than 420, up 21%. Chief Executive Ed Chung saying the company is on track to surpass $500 million annual recurring revenue by fiscal 25. Rudi.
Yeah, I just spoke about the vulnerable and the strong. Let's just say that this is not one of the vulnerable ones. I've been a big fan of TechnologyOne now for, I don't know, 2 decades or so, 20 years. I think there's a few lessons for investors. Like the share price actually on the day, that's by the by. That's basically in comparison to what analysts have in their forecasts, and they can sometimes, and today's result, they miss on a few things and they do better on a few other things. I think why the market is excited here is that I think the quality of the growth was a little bit better than expected, and they hold on to their larger targets, including their margin going to 35%. And I think that's just good news. They're doing well in the UK. I mean, I keep on saying this. Most CEOs of ASX listed companies would give their right arm and their left arm, if they had to be able to come out every single 6 months times with results that look similar like this. Right? Most companies, that's a pipe dream. They can't do it. And for investors, it's a case of if you're a growth investor, if you're a quality investor, then this should already be in your portfolio. If it's not, I mean, the best advice I can give anyone is wait for the pullback. They always come. Look, there's always a pullback somewhere along the lines. You probably don't want to chase them when everyone else is buying them. But from a personal experience, it has been an absolutely thrilling experience to have this stock for over 20 years in my portfolio.
All right, so you're definitely holding it, but to buy, you'd wait for a pullback.
You wait for the pullback.
You'd add.
That's because you know what? There's a psychological element as well. When you get on board and the share price sinks, you always think like, oh, why me?
Yep.
Right? Just so you wait a little bit longer, and then it's not you.
All right. Okay, Philip.
Look, I tend to agree. It's a great bottom draw stock. Buy it, hold it for 20 years, and then eventually retire on it. Before today, it was fair value on analyst consensus for what it's worth. Yeah. There'll be upgrades today, 5-6% in line with the beat. Pays virtually no dividends, so it's not a must chase. We cover it. We think it's a hold, so I'll call it a hold. It was a great result. The share price reflects that. We're going to see some consensus upgrades, but I agree with Rudi. No point rushing in, joining the herd today and bidding it up. There'll be a pullback. There'll be a quarterly or something. There'll be a change on interest rate views.
When the bond
yields will go up,
yeah.
It'll get sold. So buy it on a pullback. Wouldn't buy it today, but if you owned it, you'd sleep well at night owning TNE. It's a good stock.
There we go. 2 stocks of the day for you right there. Right.